India's biggest housing finance company, Hdfc, has cut rates by 50 basis points. This comes at a time when banks and home finance companies are locked in a rate battle. On What's Hot Tonight, we ask, are rates headed lower? Joining us, Renu Karnad, MD of the company. Ms. Karnad, many thanks for joining us. Take us through the implications of this cut. Does this apply to new home loan borrowers and existing customers as well?
Well, this will apply to the old borrowers of HDFC. That means for whose accounts they are already paying the installments, the EMIs have begun. You see, if you see, we have in the last couple of months dropped our rates for new borrowers, which means that our PLR was the same, and we had increased the spread for the new borrowers. And that is really a function of the fact that, the new loans that we raise, the new liabilities that we, are raising were at lower rates. But the old liabilities, which were continuing from the past, their rates had not come down. So as those liabilities mature and as there is a churn, those rates come down, and therefore we're able to pass on the benefit to the existing borrowers, the borrowers who had actually already taken the loan. So that applies to all of them. So our retail prime lending rate, which was 14.5, has come down to 14. Now this actually, the spread on that is just so different, in the sense that, because of the various reductions that have happened in the past, when you say 14, it seems like it's a very high rate, but the current rates at which we are lending to new customers are for a loan of 30 lakhs, 9.5%, and for a loan over 30 lakhs, 10.5%. And, if you were to compare it with competition on an effective basis on a 15-year term, where you are also taking into consideration the first-year discount that many of the banks or institutions are giving, that the effective rate is lower. And this really has been triggered off very simply and very clearly by the cost of funds. We have last week also reduced the rates that we pay on our deposits. And so that's the reason why we've been able to do it.
All right, Ms. Karnad, important clarification there that this is also as far as existing customers are concerned. But you were talking about the cost of funds. If you can tell us exactly how much your cost of funds, your effective rate has come down by.
The fact that we are able to pass on a 0.5% reduction certainly is that our cost of funds have come down to allow us to pass that, to the borrowers.
Well, Ms. Karnad, is this really reacting to the dynamics of the market at this point in time? In a sense, are you reacting to competition?
Well, I really think that we were the first ones to do it. And if you look at it, we dropped rates first and then the other players dropped. And now what we have done is that we've dropped it for existing borrowers, which, except for LIC, which I think recently has done it, none of the other larger players have done that as yet.
All right, so we'll have to wait and see if your competitors actually drop rates further as well, Ms. Karnad. But we've seen the RBI stepping in with monetary action 5 times on the repo and 3 times on the reverse repo. So let me ask you, do you actually think there is further headroom for a rate cut since the problem of inflation now seems to be a thing of the past?
Well, I think we have seen the bottoming out, and I don't expect rates to go down further. And but however, if that happens, we will certainly look at it again.
Ms. Karnad, what is your assessment of realty demand in the housing space at this point? Have prices bottomed out, or is there some more cooling left?
In many cases, Harsha, as different from the last time I must have talked to the press, I've seen a major decline. We have developers who have dropped prices. And if somebody was to come and ask us, we can give you names, prices by as much as 30%. There are developers who have restructured projects and made smaller homes instead of larger homes. So that brings the price down. They have dropped them. They have, reduced their margins, which were high. The margins have come down. And in some cases, I don't think in all, where they were really making the very, very high marble, etc. sort of homes, they have, tried to make specifications more to the middle income level. So looking at the middle income segment. And all that, and this, Harsha, believe me, across the country. Now, a lot of people might be thinking that the rates are going to go further down. I don't think the rates will really go much further down. Yes, there are certain builders, there are certain cities where the builders are holding on and have not, but I would say in majority, in 60 to 70%, people, they have reduced it. Some have been courageous enough to give ads, put it in the papers. Like in Bombay, some people have done it. They've done it in Chennai. The others are doing it on a one-on-one basis. But they have reduced costs by anything, I would say, from at the lowest being 10 to 12% to the highest being around, 20%.
Ms. Karnad, many thanks for joining us. Appreciate you taking your time off. That was Renu Karnad of HDFC.